Hello, we are the MMEECP Appraisal Corporation. Today we'll be talking about the appraisal of 3901 South Dakota Avenue, Northeast, Washington, D.C. My name is Parker Ring, and I will be speaking about our property in the Washington, D.C. market. Our subject property is a single-family home built in 1934. This house has 3 bedrooms, 2.5 baths, 3 floors, a basement, and an attached garage. The subject property is within a mile of the local elementary school, middle school, and park. Washington, D.C. has a high population density, with 705,749 people as of July 2019. This is an increase of more than 100,000 people since the 2010 census. As of July 1st, 2018, there are 319,531 housing units in the Washington, D.C. area. Based on this data, there are an average of 2.29 people per household, making single-family homes very popular. Using the sale comparison approach, the cost approach, and the income approach of both the direct capitalization and the discounted cash flow approach, on April 4th, 2020, we reached an appraisal value of $849,931.48.
Thanks, Parker. Hi, my name is Ethan Greenberg, and I'm going to be talking about our comparable properties. With this map, you can see that we tried to choose all of our comparable properties that are roughly close to the same parks, schools, and zoning districts so that we have a baseline to find out how much it costs to live closer or further away from different amenities. With these 6 different comparables, we were able to come up with a complete sales comparison approach that distinguished the different prices between bedrooms, bathrooms, acre size, and square footage.
Hi, my name is Cole Jenkins, and I will be talking about sales comparison descriptive statistics as well as our sales comparison approach. To start with our sales comparison descriptive statistics, in our column we have the minimum, maximum, average, and median for our price, our year built, lot size in acres, our square footage, our price per square foot, our bedrooms, and our bathrooms. These are all numbers regarding our comparisons, comparable properties, and as you can see in the chart, our minimum is $454,000 and our maximum price is $1,008,000. It ranges year built, lowest of 1915 to our maximum is 2006. Our lot size varies depending on our comparable properties, but 1,742 is our smallest lot size, and our largest lot size is 6,385. You can read the rest. All of our bedrooms are equivalent to each other, and our bathrooms, 2 of them are 2 bathrooms, and the others are 4 bathrooms for our maximum. Going down into sales comparison approach, our square footage when calculating the adjustments, square footage of a comparable was subtracted from the square footage of the subject property. We then multiplied this number by the median number of our comparable properties, or median price per square foot, and the median price for our adjustments was $310. For year built adjustments, we changed the value for property from year built to current price with the value of 1.8% in appreciation. We then subtracted our comparable properties year built from the subject and multiplied by our most recent comparable sales prices. Our bedrooms were all the same, so there was no adjustment needed there. In our bathrooms, according to Pocket Sense, it will be an additional 9% in relative market value to the house, so we simply multiplied 0.09 by the current price of our comparable properties. In our land size, according to our research in this area, the average acre increased price by $8,680, so we calculated our adjustments with the difference between the acres of the comparable and subject property multiplied by that increased price of $8,680. To get our adjustments for all of those, we add them up, and then we decide that our average price is going to be $988,390, and that is the sales comparison approach.
Hi, my name is Elizabeth Scotes, and I will be going over the cost approach, which is one of the three approaches we used to find the appraisal value. We first started with finding the estimated replication costs, which we found on costtobuild.net. By inputting different criteria of our house and different characteristics, we found that the cost to replicate the building was $519,355. We then subtracted out the estimated depreciation, which we found by taking that estimated replication cost and multiplying it by the age of the house over the estimated life of the house. A typical brick house has a life of roughly 100 years, so that is why we used 81 for how old our house is over 100 years. We then found that value as $98,677.45. We then added back the estimated value of the land, which we found as $481,695, which was due to research we found on Redfin and other websites like Zillow and such. So then in total, we found that our cost approach for appraising totaled $580,372.45.
Hi, my name is Mitchell Robinson, and I'm going to be discussing the income approach for our property. The direct capitalization approach was able to yield a figure of $35,268 of potential gross income for us. This yields a net operating income figure of $26,120. The cap rate used in our estimate was 7.28%. We were able to determine that a market average was between 7% and 7.25%, though we increased our estimate by 0.03% to reflect the age of the structure. It should also be noted that the District of Columbia is notorious for inordinately high property taxes and insurance. Finally, the discounted cash flow yielded a present value of all future cash flows of $480,888.50. The discount rate used in this figure was 3.239%, which was calculated using a holding period of 10 years. Thanks.
By valuing the sales approach at 70% of our final appraisal value, the cost approach at 20% of our final sales value, and both income approaches at 10% of our sales value, we found that the reconciliation value and the total of our appraised house is worth $849,931.48.
Hi, my name is Michael Paterakis, and I'm going to be talking about the coronavirus section of our report. So to start off, I'm just going to go over what the coronavirus is, give you guys some background information, and go over ways to protect yourself and symptoms of the coronavirus. So to start off, what is the coronavirus exactly? The coronavirus is a respiratory illness that can spread from person to person. It's very contagious, and it's a novel coronavirus that developed in Wuhan, China. And it was a result of human and animal interaction. So people are speculating that it came from an animal such as like a bat in a wet market that someone might have eaten. Then the virus is just kind of spread from there. So if you get the coronavirus, what really happens? There's a lot of different scenarios that have kind of resulted from the coronavirus. It can range from mild to critical, but patients have experienced pneumonia in their lungs. And they've also experienced just a cough and a fever, and then they get better in 10 days. Or, it can range from that to something as worse as like organ failure, lung failure, and then in critical cases, sometimes death. So what are the symptoms of the coronavirus exactly? Basically, patients with the coronavirus are going to start to see symptoms that mirror a mild to severe respiratory illness. So you're going to have a fever, a cough most likely, and then shortness of breath in some cases. These are just some of the symptoms that patients have experienced, but in almost 90% of cases, you're going to see a cough and a fever. So if you have any of these symptoms, definitely isolate yourself from people in quarantine and see if you have improvement, and if not, seek medical attention. How do you protect yourself from the coronavirus? So basically the best way to prevent contracting this virus is really just avoiding close contact with people because you don't know who's sick or who may be carrying this virus, and it can spread so quickly through coughing, sneezing. If you cough on something and then someone else touches it and you have it, if they touch it and then don't wash their hands and they go eat food, or they touch their eye or their nose, it's going to most likely spread to them, and that's how it kind of rapidly goes across countries and infects thousands to millions of people. So just make sure that you're aware of that, and make sure you're washing your hands with soap and water, covering your mouth when you cough or sneeze, and really just practice social distancing. So now that I've gone over kind of what the coronavirus is and given you some background information, I'm going to go over the impacts of the coronavirus. So to start, I'm going to talk a little bit about the differences and similarities between the coronavirus and the 2007 financial crisis. So for similarities between these two events, during both the coronavirus and 2007 financial crisis, the United States faced the economic challenge of diminished consumer confidence and decreased spending. So the coronavirus has really hurt small businesses across the country, and state-mandated shutdowns have really kept consumers away from where they usually would be in their spending. So this decrease in spending kind of mirrors what happened in 2007, because people were kind of panicking about the economy. They were losing their jobs. They didn't know where their next paycheck was going to come. So spending was definitely tightened up, and people weren't out spending money on luxuries that they may have been beforehand. So both events have really decreased consumer spending, and they have honestly decreased confidence across the country, and people are kind of unsure where their next paycheck is going to come from. So that's a similarity between the two. What are some differences? So what makes the coronavirus-led recession different from the recession of 2007 is the speed of the disruption that we've seen. So in this graph, you can kind of see how quickly the coronavirus has impacted our economy, specifically unemployment. We've already reached 3.28 million claims for unemployment, which is astronomically higher than anything we've seen in the past, including the 2007 recession, which was the previous high. And it's only going up, and it's moving at a rapid pace. This was 1 week that we had 3 million claims, and that just destroyed the record of 2007, which was over a whole year. So it's really spreading very quickly, and it's honestly destroying a lot of the infrastructure of the economy, which is very scary. And also another difference, obviously, the 2007 crisis was more so revolving around the breakdown of trust that occurred between the banks in 2007 and the subprime mortgage crisis. So that was more so focused on banks and the bailout of banks, while the coronavirus is more so revolving around the bailout of small businesses that are struggling, fixing the stock market, and really just managing the stress that's come with the shortages across the country and industries, and especially the healthcare sector. So now that we've gone over that, I'm going to talk a little bit about the impact that the coronavirus has had on our economy. So first, the coronavirus is really affecting GDP. So every year, analysts have projections for what they think the GDP is going to be for our country. And at the start of the year, they had a pretty strong GDP set out. And since the coronavirus has happened, projections have been scaled back immensely in the United States because of how quickly demand has decreased in travel industries, hotel industries, food industries, and entertainment industries. So people aren't out spending money on these industries. So the GDP has just dropped immensely. And people being quarantined, it really doesn't help because they're not able to go out and support the businesses like they usually are. And this is very important because people are starting to panic, and they're wondering how much longer we can go without some of these companies in these industries going bankrupt. So that's a big thing that coronavirus has impacted in our economy. Another thing is the stock market, obviously. In this graph, you can see on the left, it shows the drop in the stock market since the coronavirus. You can see that The S&P 500 has dropped almost 10%, which is just crazy considering how well it was doing beforehand. And fear surrounding the coronavirus has really led to this because investors are panicking, and this panic is really causing the market to be volatile, and it's going up and down, up and down, up and down. And there's no real stability because people don't know what's going to happen next with the virus. And this has really been stressful because it's impacting a lot of investments that people have in the economy and the stock market that are directly related to their pensions or their retirement funds or their individual savings accounts. So that's been another thing that's been impacted. And finally, the coronavirus is really a health and economic crisis. And it's putting a lot of stress on the financial and healthcare system across the country. Banks really made an effort after 2007 to fortify themselves. But since the coronavirus has happened, investors have been really, really scared to buy anything that has any hint of risk. So, banks are still struggling a little bit right now, and manufacturers across the country are struggling because they can barely keep up with demands from the healthcare industry to produce masks, equipment, stuff like that. So, overall, it's just impacted many different facets of the economy, and it can kind of be seen across many different projections, the stock market, in the healthcare sector. Now I'm going to talk a little bit about how this coronavirus might affect buyers' preferences in housing and relate it back to real estate and the appraisal report. So I think that the coronavirus might affect preferences in housing in numerous ways. I think that it's definitely going to change buyers' opinions on location. So I think that the coronavirus, as you can see in statistics across the country that are coming out, it's really ravaged major cities, especially New York, New Jersey, Chicago. So I think that this might impact how buyers view where they want to live, and it might raise concern and affect where they're buying houses, because I think they're going to start to shift away from these big cities that has a lot of risk when a pandemic happens. And next, I think buyers might change their opinion on whether they want to purchase a house right now. I think the coronavirus has really impacted income for many Americans. So with the uncertainty of being able to pay off a mortgage, I think that buyers are going to start to prefer maybe renting or holding off in general. So you're going to see the market soften, and it might lead to just reduced mortgages being bought. And lastly, the potential price impact on the property that we chose for our appraisal subject will probably be a negative impact. We chose a property that was in a highly densified area by a major city, Washington, D.C. So I think the appeal to this region, like I said, is going to dramatically decrease due to the high number of reported cases and deaths. So finally, you might be wondering, what's our government doing to help mitigate the financial impact of this coronavirus? So first, with the approval from the government, the central bank has been cutting rates to nearly zero, and they announced a $700 billion quantitative easing program. So what this means is it's going to help stabilize the economy and help keep it afloat right now during these troubling times. And also, they're going to try to keep money flowing in the economy. So they established something called the Primary Dealer Credit Facility, which provides short-term funding to big financial firms, and a commercial paper funding facility to purchase corporate paper from issuers. So basically what this means is they're kind of stepping in and being the distributor for loans and commercial paper so that companies that need it right now that are struggling can stay afloat until this passes. Second, on March 18th, President Trump signed a coronavirus relief plan to expand paid leave for workers. So this was a $100 billion bill, which included provisions for emergency paid leave for workers at big businesses. It gave expanded unemployment insurance and helped with free testing across the country. And finally, President Trump signed a $2 trillion economic relief bill that passed through the Senate on March 27th. This was the most discussed bill that's been all over the news because you might have heard that if qualified, you can earn up to $1,200 a month. And what this basically is intended to do is basically serve as an emergency package, and it's an injection into the economy with provisions aimed to help American workers, small businesses, industries that don't have the money to spend in the economy. It kind of gives them that extra money to go spend on small businesses for food or consumer goods. So that is just some of the many things that the government's been passing that is tangible. Obviously, they're doing a lot of other things to mitigate the financial impact, but those are some of the big ones. But that's all I have about the coronavirus and the impact it's had on our economy and some of the ways that we've seen it honestly ravage the economy. So thank you for your time. I appreciate it.